What sales tax solutions does Clarus offer? When someone asks me about Clarus Partners and our services, I just tell them, if it touches sales tax, Clarus can handle it. Specifically, our offerings include compliance, registrations, VDAs, audit defense, refund claims, Nexus Studies, and taxability determinations. So we'll quickly look at each of these. Clarus prepares and files over 70,000 sales tax returns annually. A lot of CPAs prepare income tax returns. Very few prepare sales tax returns. There are some software companies out there, and businesses that have used them recognize the challenges of using a software tool to do the work yourself rather than obtaining help from a professional services firm that actually performs the service. If you're filing sales tax returns in multiple states and currently using a software platform, I would suggest you request a demo and proposal for our services. We quite likely can relieve you of this pain point. When businesses have a requirement to begin filing in a state, the first step is to get registered. This process can be fairly cumbersome for someone without the experience to do it, particularly when multiple states are involved. Clarus has a separate division dedicated specifically to registrations. Voluntary disclosure agreements are filed when businesses realize they have a tax liability, are concerned about the existing exposure, and want to come forward to pay this tax. The benefits include limiting the statute of limitations. Typically, there's a waiver of penalty and sometimes waiver of interest. These voluntary disclosure agreements are generally filed anonymously, and Clarus generally files these on behalf of our interested clients that can see benefit from them. Businesses come under sales tax audits just like they come under IRS income tax audits. It's just that there's one IRS and 45 state departments of revenue that audit people for sales tax. Our team can help you navigate your business through the complexities of a sales tax audit, acting as a taxpayer advocate. Everyone hopes they get a good, experienced auditor, without an agenda, who does nothing but calls balls and strikes. But the fact of the matter is, some auditors are overly aggressive. Many don't have the equivalent experience that matches up against our consultants. Sometimes they just get things wrong and need to be corrected. Another thing, auditors are looking for underpayments of tax, not overpayments of tax. I recently had a client that started off with a $1.4 million liability. Not only were we able to bring down the assessment, we also obtained refunds on behalf of the client. At the end of the day, that $1.4 million assessment turned into a $400,000 refund for the taxpayer. Standalone refund claims, also known as reverse audits, are a great way to help ensure you aren't overpaying your sales taxes. You see, just because a transaction is deemed to be taxable under statute doesn't mean sales tax should have been paid on every transaction. A power saw is purchased at a hardware store. Taxable, right? But if that saw is purchased by Habitat for Humanity for it to help fulfill its mission, well, that saw may be eligible for the nonprofit entity exemption. Or if that saw is purchased by a business that makes furniture, it may be eligible for the manufacturing exemption. We can't go over all of the exemptions available to taxpayers, but I can tell you that Clarus helps businesses slog through the complexities of sales tax exemptions to recover significant savings in the way of sales tax refunds. We have recently identified a refund opportunity specific to restaurants. We are offering our refund review services to restaurants for this on a contingent fee basis, meaning that we are only compensated based upon a percentage of recoveries. If we don't put money in your pocket, we aren't paid. Talk about found money. Ever since the Supreme Court's Wayfair decision in 2018, more and more businesses have realized the need to address the issue of out-of-state sales, also known as remote sales. We still run across taxpayers who sell in multiple states and are unaware of their responsibilities to collect tax in these states they do not have a physical presence in. The rules for collecting tax are complicated. What is the rate? Is it an origin-based state or a destination-based state? What is the sales threshold for economic nexus? How is the threshold measured? Clarus can bring clarity to the puzzle of economic nexus and the requirements for remote sales tax return filing. With dozens of state statutes detailing hundreds of thousands of rules about sales tax, businesses often need assistance determining the taxability of their products. Just look at software and the taxability implications. At a high level, a good general rule is that the sale of software will be taxable. But examine some of the nuances and you'll soon see it's just not that clear cut. Is it software or is it software as a service? Many states will tax these two offerings completely differently. And what about the exemptions that apply to software as a service that do not apply to software? If it is software, is it a sale of software or is it a license of software? This distinction may matter. Is the software transferred physically or digitally? This makes a difference in some states. And if it is transferred physically, are the associated delivery charges taxable or not? You can see the complexity involved. Whatever sales tax consulting issues you may have, Clarus has an advisory function to bring you a clear, concise resolution.